are going to get started here in a couple minutes. Just wanted to welcome you personally. We're going to hang on probably about 2 more minutes to let people jump in, and then we're going to go right into this webinar and make your taxes so much easier to handle this year. Got 3 tips for you we're going to share, and it will be amazing the difference that you'll see in your tax process this year. And we're going to get you set up so it'll be even better next year. All right, so let me see if I can see how we're doing. I can. That's excellent. And that's what I want to see. All right, we're doing great. I'm only going to wait 1 more minute now on the countdown. Hope everybody's having a great day. It's what? Wednesday, so middle of the week. I'm in Philadelphia, Pennsylvania, and it's pouring rain and it's cold. I don't know if that's the same for you guys, but I sure hope not. Get a little water before we get started, and I'm going to share my screen. And let me start with that share. And then I'm going to go to my slideshow here. And that should be showing on the share screen. Let's see if it is. It is. That's fantastic. All right. We're going to get started without much further ado, because those of you who are here right at the start deserve to make efficient use of your time. So I'm going to go through this in some level of detail, but I'm going to leave time at the end for Q&A. I try and keep it as fun as we can. So first of all, who am I and why should you even be listening to what I have to say about this kind of thing? So what you need to know is I am a CPA and an MBA, and I'm a certified CPA, and I keep that current. However, I've decided not to practice taxes. I've decided instead to practice getting my clients ready for taxes, which is one of the things that we do. And where do I come from? So I've published a book called Your First CFO, which a number of entrepreneurs have given some fantastic reviews on. I'm the founder and CEO of Profit Concierge, Profit Map as well. I have 25 years before this in finance and Fortune 500 companies, private equity owned companies, venture-backed companies, and venture-backed investments. For the last 10 years, I have been serving small business owners, and exclusively small business owners in the last 6 years, actually 8 years. So I have really focused on developing what works in finance for small business owners. As a result, I'm a speaker, educator, coach, podcaster, TikToker, you name it, everywhere on social as Pam S. Pryor. And then separately, I'm a treasurer for two not-for-profits, one a Grammy-winning choir, and the other a wonderful charity that supports deployed soldiers, sailors, etc., with packages from home. So welcome. That's a little bit about me kind of professionally. One of the things that is important is that, you see the cred. These are a number of the entrepreneurs that I'm working with now and or have worked with in the past. You may recognize some of these folks, you may not. But all of these are entrepreneurs in anything from RBG makes heavy equipment. Rachel Rogers is a coach. Angela Loria at Arthur Incubator is a publisher. Cosmos Q makes barbecue sauce. So you can see we cover the gamut from e-business to brick and mortar business to coaching. And the cool thing is what I've discovered is that what works for one who is an 8-figure entrepreneur also works for somebody who's just starting out. And that's what we're going to help you with today. Wherever you fall on the spectrum, you're going to get input. My staff consists of 3 dogs and a cat, and actually a team. And the team is amazing. And I want to thank them because they're the ones that make these workshops possible and have been able to get us information out to you. And me personally, why not? This is my why. This is my why that you're looking at. We have my wife here. We were lucky enough to go to the Phillies game when they won the division title this year. We were there when they won the World Series in 2008. So we've been around a while. And these as my daughter and my bonus children. And she's gotten engaged this year and moved up to Philadelphia this year. So a lot of excitement in our family. Now, I'm going to do the only pitch you're going to get during this entire video. Well, there might be little hints, but nothing major. And what I'm working to do is get as many people as we can into the Profit Map Academy and Mastermind. The reason for this is, and it's priced in a very reasonable way because it's kind of my mission to show entrepreneurs that they can understand the finances in their business early on, in the middle, and when they're ready to sell, or at any point in between. And it can be fun and it can be relatively easy if you start being a CEO instead of trying to be a bookkeeper. So what is this membership? In short, it's a guided, done with you digital course with coaching and a mastermind experience. It's through a proven map that I've developed that I work with every single client on in bite-sized steps. And the goal for every client that I have and for every member of this membership is to build your business cash flow so that you have the money to invest in your personal goals, whatever they may be. All of them legitimate, valid, and deserve to be invested in. What does it look like? The Academy is a digital course called CEO Finance Foundations, bite-sized videos. They're profit math lessons created for CEOs. Each one has an assignment and a next step that's very easy to do. These bites will take you 8 to 10 minutes to watch and maybe 15 to 20 minutes to do whatever the exercise is. You could choose to do them in a day. You could choose to do them over a 12-month period. Plus, you're going to get entrepreneur tested tools that go along with all of it. It's all the spreadsheets and worksheets we use for our own private clients, along with a lot of hacks and mindset training, because every single entrepreneur I've ever worked with has definitely had mindset blocks around money. And we work very hard on that because of all the obstacles to dealing with our finances, all the obstacles to reaching our business finance goals. That is the most insidious. And we spend a lot of time on that. And the mastermind is where we meet, where we collect. It's a members only Facebook group, and it's a weekly Zoom call. And those Zoom calls are a combination of enrichment around finance and accounting, always in bite sizes, and of course, community and mastermind and sharing. And we've been having a great time in there. What amazes me and what I love is seeing people pass business to each other as a result and getting to know each other in this community. And then, of course, there are members only discounts. If you're interested, that QR code that you see on your screen right now is one you can take a picture of, or pampryor.me/profitmap-app. It's an application process, and it's a very different application process, not like one you've ever seen before. It's not to qualify you. It's to learn a little something about you before the next step. So if you're interested, definitely grab it. This membership is $350 a month, and there is a pay full year option. But basically, this will lead you to a call with me before you even have to consider making that kind of commitment. Okay, here we go. Now we're onto our agenda. We're diving into the meat of this thing and why you are here. 3 steps to simplify your tax time. First thing you want to do is isolate your spend. And if you're just starting as an entrepreneur, or even more likely, you've been in business a few years and now's your first profitable year, you know you're going to have to spend some money on taxes. So there's this wild scramble to say, yikes, I got to get everything caught up. That's true. However, don't let it be as daunting as it sounds. Right now, when you say, I've got to get everything caught up, I've got to do my taxes, it looks like Mount Everest. I'm going to give you steps here that'll get you ready for 2022 taxes in a way that looks like steps rather than a climb up a mountain all in one shot. So a couple things. One is I'm going to show you a shortcut for how to capture all of the expenses and income that can be applied as, well, the expenses that can be applied as deductions and what your income ought to be. We're going to go through that here today. Second thing is I want to give you a little tip. I'm not going to tell you for a couple minutes, but receipts are not your bottleneck. So if you're like hesitation to start getting into being ready for the tax year is that you've got a box of receipts sitting there that you don't want to dive into, forget about it. They are not your bottleneck, and I'm going to show you why. Just pretend that box isn't there for a hot minute, and I'll show you why that shouldn't be the thing, or looking at that shouldn't be the thing that holds you up, okay? Second thing we're going to look at is how to upgrade your 2023 experience for taxes. What can we do to really set things up so it's actually a complete no-brainer next year? And if you see this workshop pop up again, you're like, nope, got that, handled it. So we're going to talk about setting up bookkeeping and how it's really a lot easier than you might think. Third thing we're going to do is figure out you need to know what you're going to owe. And there's a little bit of a shortcut to get there for you so that you can at least go into the end of this year going, all right, I know about what we're dealing with. And there's a little piece of good news there as well that I'll share. All right, let's dive in. We're going to isolate spend first. Step 1, isolate spend, or receipts aren't your bottleneck. Here's what you really need to know. What you're really trying to identify, and all that you're trying to identify here, is your net income, which we're going to do in step 3, but also what you spent this year that could be considered a business expense. Don't make it any more complicated than that. You're not looking to get all your stuff in a bookkeeping system. You're not looking to be able to create a great management P&L. You are literally only looking for what have I spent this year that I could possibly count as a business expense, wherever it might be. Now, I'm going to assume when I do a little bit of a demo here that you've got a separate business account, but even if you don't, what I'm going to show you is an easy hack for finding out what you need and what you need to include, or what you might have the opportunity to include from your personal spending. Okay. Here's what you need to know. There are only 2 places to look for these expenses. That's it. You don't have to be, open up to, oh my God, where could all this stuff be? There's only 2 places it can be. You have either spent it on a credit card and you need credit card statements, and hold that thought. You don't actually need the statements, or it's been paid out of a checking account. Now, some of you may have cash under your mattress and you might have used cash to pay for things. If that's true, I will confess, I can't help you with that. If you didn't keep track of free cash that you literally had in your hands and spent on expenses that could be business expenses, I can't help you. But for the most part, in this day and age, people aren't doing that. People are very rarely even writing out checks anymore. Checks, however, are covered in this process. So there are only 2 places you need to look. And here's the secret. It's all electronic now. And I'm going to show you a little bit of Excel-ish, magic-y stuff that'll help make your life a little bit easier on this. So that when you get to this point where you're like, oh my God, I've got to get ready for taxes, take a breath and go, okay, all I need to do is find where I've spent things that could be considered business expenses. There's only 2 places that can be: my checking account or my credit card. And I can go get that electronically. So let's go get it the easy way. Here are the steps we're going to do. We're going to download the data, because every credit card and every bank account has a login, an electronic bank now, where you can log in and get information. We're going to bring it into Excel or Google, and we're going to do a couple of things to sort and total it. That's it. I'm going to do a little demo of that now. So I'm going to stop the share. And we're actually going to go over to, I'm going to stop my slideshow for a minute here as well. And I'm going to share a different screen with you in just a minute. I'm actually signing into my bank. That's how much I trust y'all, because I'm going to show you inside my bank what you can look for inside your bank or credit card. So let me now share my big old personal banking screen here. I'm using an account that is really just an account we have to have open in order to have all the different accounts that we've got. So I don't think you're going to see any deep, dark secrets here, but let me share this screen and make sure that it's sharing properly here before I go on. So, all right, now you know my secret. I'm a Wells Fargo banker for some of my banking. And what you need to do, all you need to do, and this goes for any credit card account or any bank account, is come in here, go into that account. And I don't care what bank you are, even and I've had a ton of clients. I can't even count how many clients and members we've had. Even the ones that don't appear to be able to let you do it, there is always somewhere an option that looks like this: download account activity. Now, there may be a search button you have to hit first. Who knows what there might be there? But for the most part, banks will let you download at least the last 90 days. And the only ones that tend to limit you to just 90 days tend to be credit unions and very local banks. There are a lot of online banks that make this a lot easier now because they get it. They know how people operate. But find that button. You're going to hit download account activity. And it'll usually take you to a screen that looks something like this. What date range do you want to download? And I'm just going to say here for fun, I want to download. I'll just pretend I started my business on September 1st. I want to just download every transaction from here to here. Now, a couple things. We're going to skip these first 2 options, but you may see them in your bank as well. Get a comma delimited file. That's what you really want, is a comma delimited file. All right. And we're just going to go ahead here and hit download. And that's going to create a file. Now I'm going to stop this share, and we're going to share another file, because over here, we have what that looks like when you open it up. So we're going to share this screen now, and this is what you're going to get. Now, the reason that I say don't panic is everything you've done, if you have one spreadsheet for your checking account here and a couple spreadsheets for your credit cards, everything you've done all year will be in this spreadsheet. And you can see it's pretty simple. It's the date of the transaction, and it's what we did. So in this particular case, I've got a mishmash of an example here. I combined a whole bunch of different client stuff into one, so it can't really be interpreted. But what you're going to want to do, what you can do, is now sort this rather than by date. Remember, you're just looking for the total deductions for the year. That's all you care about. You don't care what month they happened. You just want to look at the total deductions for the year. So you can very easily take this entire database here and go to data and say sort and pick column E to sort by. And I don't know if you can see it, but I've got a sort by item here, and I'm just going to pick column E, and it's going to sort it by the names in a second. Oh, I've got to save my workbook as an Excel sheet. Hang on. That is a little bit of a note. CSV file as an Excel sheet, just so it lets you play in it. And now I'm going to do data sort and sort it by column E. And now you can see that it's all sorted in order of name. So now you can see, and there are a whole bunch of other tricks we can show you for Excel, and there are plenty of them. But the biggest ones that I use, and I'm going to show you it, even though it's a little bit of an advanced trick. What you can do is highlight everything here. Now, first of all, see in this particular case, this column's blank. I don't need that column, and I don't need the column with the asterisks in it. So I'm just going to highlight those two columns and delete them. They're out of my way now. But now I can go and select everything here and pick data filter. Okay. And once I do that, you can see these little down arrows here. And what that allows you to do is hit the down arrow and see what all the different unique vendors or transactions are. It doesn't help a whole lot, but you can, because they show separate ones, but you can see, oh, all these are Zells, all these are Stripe, all these are business to business, but you can then figure out how each one applies. And then all I do is I set up a new column here. Often I put in a header column just because it makes life easy. And I go date, amount, and, expense, whatever you want to call it. And then over here, I put include and a question mark. And I'll go through and go, all of these get included and all of these get included, and just literally fly through it, putting X's in place. And then when I'm all done, I data filter it again with that column as well. And when you do that, I'll just do it this way. Filter. When I do that, you'll see now I can filter on the X's. Hit the X, hit apply filter. And now you're looking at only my business transactions. You can copy and paste that into a document for yourself or for your tax accountant. Now, fancier ways to do this, you can go ahead and instead of just include, you could say what tax category it is right here. But all the data is there. Even if you're going through this one by one and marking it down, it's not pulling out each receipt, matching it, trying to find the transaction on a statement. The easiest way to go at this is to download all the data into one place and then march through it a piece at a time. Okay, now we're going to go back to the share of the, and Jennifer, I think you're, what's the word I'm looking for? Facilitating for me. If you see a couple questions pop up yet, let me know here if there are while I'm switching over to the share.
I will do. If anybody has any questions, you can just pop them into the Q&A.
Awesome. All right, so let's get to this next slide. All right, so that's kind of a little bit of step one, but there's another little secret to step one. And the other little secret to step one is that receipts are not your bottleneck. So let's go through some receipts so that you can stop panicking about that shoebox that may be sitting there. One is, yes, you absolutely need your receipts. So don't go burn it in a bonfire yet. But here's the secret. You don't need them in order to file your taxes. Okay, now listen to that sentence carefully. In order to file your taxes, you don't need them. Hold that thought, all right? You've got some options now. You can keep them in that box, find them later, and or you can understand the risk about receipts and make a decision for yourself. Now, I am not at all recommending to anybody that you get rid of your receipts or that you don't have them, because if you are audited, you definitely want to have them, and the better organized they are, the better off you'll be, because it'll be so much easier. But you've pulled the data in the first thing I taught you directly from your bank accounts. So you know for sure those expenses happened, right? So you're not misrepresenting anything to the IRS at this point in your return, right? At all. You just happen to not be putting the receipts yet. Well, you don't file your receipts with your tax return. You just need to have them if you're audited, okay? So let's talk about this. I advise that starting today, go ahead and keep your receipts organized. Now, that does not mean you have to have hard copies of them. And there are plenty of programs, whether you do bookkeeping or not, even if you just use your camera, take a picture of the receipt, then you can throw it away. We are not required to have paper receipts in the US. Canada, I will tell you that I have read on the CRA site that you don't have to have paper receipts, but I am not a Canadian CPA, and I have never heard an authority in Canada say that you don't need them. But I do know in the US, you do not need paper receipts. Electronic versions are fine. So if you back your phone up to the cloud, you can just use the camera. Now, there are a lot of other ways you can do receipts that makes it even easier, but the point is you don't have to keep any hard copies anymore. So that's important. The next thing is, here's my pitch. One more suggestion: join the Profit Map Academy and Mastermind and learn all of the secrets and tools for efficient financial CEOing. This is the things I help my entrepreneurs decide on who are in the mastermind. Hey, here's where you need to focus right now. Let's push that down the street a little bit, because you're not going to need that quite yet. Then when it gets time to need that, we can address it. But let's talk about what I say here about find them later, understand the risk, and decide. What do I mean by that? So you have to do your own risk management. And there are two kind of counterbalancing things happening out there in the world around audits. Like I said, you only need your receipts if you're audited. So the risk management decision you have to make is, what are the chances of me being audited? Well, two things have happened. One, you need to be aware that the total price tag for COVID relief in the US was almost $6 trillion. And if you look at all of the money that the US government has put into the economy up until 2020, nothing ever even barely by a magnitude of 10 approaches that number. That is a lot of money. Now, what did they do to do a good bit of that? They created treasury debt. So there's debt that needs to be repaid. How does the government get money to repay debt? Say it with me: taxes. So they have added, as you've probably heard, 87,000 agents. Now, the truth of that is it's a very awesomely exciting headline, and it turns heads, and it's got all sort of political implications. Yes, the 87,000 new agents have been added. They're not all going to be enforcement agents. And the fact of the matter is, I believe they're 3 years behind on inquiries around old tax returns. So there's a lot of work to keep those 87,000 people happy. They all have to get onboarded. They all have to get trained, etc. However, the government really does need to get some cash out of taxes. One great place to go is small businesses, because in a lot of cases, the owners haven't paid a lot of attention to taxes, and they know there's opportunity there. So let's look at the small business population on the other side of the page here. What are the total number of business returns that are audited? Well, you're going to look at this and people say, oh, it's only 1 to 2% are audited per year. Well, that's okay, 1 to 2%. So 1 out of 100, 2 out of 100 businesses are audited. There are probably 100 businesses in your neighborhood, I'm guessing. If not your immediate neighborhood, your extended neighborhood. So one of them is going to be audited. 1 to 2% per year is 32.5 million. I'm sorry, out of 32.5 million small businesses means they're going to be 325 to 650,000 audits on each year on small businesses. So this is the risk reward, right? And I have some people who will say, I'm just going to keep my receipts in this box, shove them in the closet. If I get audited, then I'll get them and sort them out. And for anything you're dealing with historically, I get that. I totally get that. Why organize this box of things you might never need? However, going forward, because we know we've got to make up $5.7 trillion in debt, and because we know that hundreds of thousands of small businesses are going to be audited, just start keeping track of them, take a scan of them, and organize them. And I'll talk to you a minute later about how you can make 2023 a much easier year for yourself. But this is just the overall information on what you need to do to just get filed. So if it looks like an overwhelming mountain for you, don't. Focus on downloading bank statement, downloading credit card, put your receipts somewhere. You're not going to lose them. They're not going to burn, but just get that part done and you're ready for April. And by the way, it's April, right? It's 5 months away. It's not now, it's April. So you got a little bit of time. Okay. One other thing when you're dealing with the risk and reward piece, just to try not to become one of those 325,000 to 650,000 businesses, here are some things that generally will trigger an audit. And it's a lot less nefarious than you think. They're not necessarily trying to they are trying to eyeball crooks and people who are cheating, but the things that they look at are some that you might not be aware of. So a couple things, just want to run through these. Mathematical errors. If you're handwriting your tax return yourself, don't. Get an online tax package that does the calculations for you. It's just not worth making a mathematical error. Little transpositions. I've been audited because of it personally, not with the business, because of a stupid transposition with 2 numbers. Ended up working in my favor, but I still had to go through the audit. It was dumb. I don't know why I did it. Get one of the tax packages. Now, know that when you get the free tax package online, it actually, I think, ends up costing $9 or $10 to file your return if you want to do it with a state and if you want it to actually send. I do believe there's a way that it's free if your income's below a certain level, but for the most part, you're going to have to pay a little something to file it that way. But it is worth the risk of, or the certainty of not making mathematical errors. Okay, next thing. If your numbers in the return don't match another document, if you've got a 1099 from somebody, which is how everybody that you work for, if you're not an employee, will report your income government directly, they're going to give you a copy of that too. Make sure the number you put on your return matches the number of whatever reports you get telling you what income you have or what expenses you've had. Any mismatched tax ID numbers. So don't mess up your social security number or your EIN number. Make sure that's typed in correctly. If you have dependents misentering their social security numbers, believe it or not, that comes up a lot. And a lot of people are audited for that because that's, people double counting dependents is what they're trying to find there. Sign your return, whether it's electronic signature or hand signature, they actually will pull unsigned returns and go, we're going to audit this one. Don't overestimate the value of property you've donated to charity. If you donate property to charity, have a backup that says, or know where you're going to look when they challenge it to say, yep, what I gave, pants I gave to Blue Cross Blue Shield, or no, who do you give them to? Goodwill, were actually worth $600. And here's how you can know they were actually worth $600. Don't think so, but find the support for what you're donating. If they look year to year and all of a sudden your deductions grow exponentially. Now, if your income grows exponentially at the same time, it won't be as much of a trigger. But if you had a $10,000 income last year and you have a $10,000 income this year, and all of a sudden your deductions went from $5,000 to $8,000, that might trigger a review. Claiming losses from hobbies. This is very, 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 very common. So if you make sure that you are a business that's making money and spending money, hobbies very often are just spending. And what they're going to look for is loss after year of loss. And that would pretty much indicate to them that you're trying to deduct a hobby as opposed to a real business. Now, there are some businesses that don't make money for a few years, and that's okay, as long as you can evidence it. But, if horse riding is your business, and you ride horses and all they see is expense for horse riding year after year after year, and you tell them, well, I'm building up my coaching expertise, and I'm going to start making money 5 years from now, they're not going to buy that. And then finally, don't use round numbers. Use the actual expense numbers. They actually have a program that scans to see if you're using round numbers. Okay, cool. That's what to avoid. We're already on to step 2. So Jennifer, anything so far from anybody about step 1?
This question actually goes back to when you were talking about pulling down transactions, and that is, can we use, from Jackie McLeish, can we use Amazon orders in lieu of credit card statements?
So Jackie, here is what I understand about Amazon, and I'm still actually proof testing this myself. But if you have a business account with Amazon, you can extract the data. If you don't have a business account, you have to kind of go through by hand. However, I've heard a rumor that they're changing it so that even with personal accounts, you can get downloaded data. Now, here's my caution. You will successfully pull down your Amazon purchases. The only reason I say you still want to look at your credit card and your bank statement is because you want to make sure you're not missing anything that you didn't buy on Amazon. So yes, Amazon is a subset of your expenses, but the only way to make sure you've captured everything that could qualify is to look at all the money that's moved in and out of your accounts, which is your bank statement and your credit cards. So I hope that answers what is a really good question. Anything else, Jennifer? At this juncture?
Nothing at this juncture. Thank you.
All right, on we go. Let's talk about upgrading. So we're going to make your job a lot easier for 2023 because truth of the matter is you're a business owner. If you're here, you're a business owner, and it's time to step into the business owner pants or skirt, whichever you prefer. So here's what I challenge. No, really hope you do, because it will make a difference in your life. Start bookkeeping on January 1st, 2023. Just do it. Just do it. And you can make it very, very simple. 2 steps. That's all you have to do. You can do this in, I'll say, half an hour. Okay. If on January 1st or before January 1st, you can do it before if you want to. You buy, say, QuickBooks Online Essentials, and you electronically attach your bank and your credit card, not statements, but electronic accounts to it. And it walks you through this in very plain English. It's a very user-friendly interface. If that's all you do is buy it and connect your credit card and bank statements, you have taken the bite-sized step you need to take to get started. Take a breather. That was a lot of work. But do it. Just do it. And I'm going to show you kind of what some of the costs are. I know it costs money, but I will tell you that doing this at the beginning, or doing this at the first point where you recognize you've got an opportunity, I won't call it a problem, I'll call it an opportunity, it will change everything. It's like any change in your life, right? If you make it now, the gap between where you are and where you want to be is really small. If you wait over time, that gap just keeps getting bigger and bigger, and you have longer to climb to fix it. So just do it now. Make this the thing you bite the bullet on, because here's the thing. What they say about business, small businesses, is that only 5% of them succeed. I can't tell you why 95 fail, but I can tell you that the 5% that succeed have a good grasp of their financials. And I can also tell you that client after client and member after member has told me, wow, that wasn't as hard as I thought it was going to be. And by doing just that, by making the decision to be that financially savvy CEO, you've put yourself in the category of people that is the 100% of the 5% who succeed, right? So just do it. It's very easy. Now I want to give you a little primer on what bookkeeping actually is. We're going to unveil the mystery, because I think everybody kind of perceives of bookkeeping as this big mysterious thing that happens in some lab somewhere, where crazy people with, in the old days, we used to call them green eyeglass shades. I don't know what accountants look like today. I'm one, so this, but locked away in a back room are doing magic things with your numbers to come up with a report that you're not even going to ever understand and makes no sense and doesn't use terminology that you even use in your business. That's not what happens. Here's what really happens. You got a little guy here with a left hand and a right hand. And on the right hand, you have your bank account and your credit cards. Remember, I told you those are the only 2 places any information about your business finances is coming from. I'm simplifying a little bit. There could be loans, but for now, let's call any loan a credit card, same kind of thing. Each one of those things has a statement and a list of transactions. All that bookkeeping does is it puts those in the right hand of the bookkeeping system. The bookkeeping takes and resorts that stuff into something that makes a little more sense. It's just taking all that information and breaking it into two dimensions. One showing the months across the top, one showing what kind of expense it was down the bottom. So it does that automatically for you. So all it's doing is really making what is just data sitting on your bank statement into real business information. So let's just take a look at an example of this. What does turning data into information mean? So over here we have real information, right? Here we have data. All that bookkeeping is doing is taking that list of transactions, which kind of makes no sense in and of itself. You can't do anything with that really, except what I taught you at the beginning to get your tax return done. But it's taking it and saying, okay, now I've got real information as a business person. And if you've watched anything I've ever done before, you have heard me talk about the one cure for entrepreneurs not having any time to deal with their finances. And the real cure is they're looking at the wrong piece of paper. They're looking at somebody hands them a profit and loss statement, or somebody hands them a bank statement and says, hey, here's how you did last month. And it's like, well, what does that tell me? Well, bottom line, it tells you nothing. But if you put it in context, and in this particular case, in the context of time, now all of a sudden this information is telling you a story. Now I'm stepping beyond taxes here, and that's because I tend to do that because I just can't stop myself. But here's the thing. Here I can see, oh, there's the story of my sales. They go up at the end of the quarter in March, and then they start to shrink back down in the spring. What's going on there? You can look at the story of your business now and really start to make some decisions about what's going on. You can look at each of your expenses and decide, do I want to be spending that? Is the net income what I want to be getting out of my business? That's a whole nother workshop for a whole nother day, but don't worry, we're going to do these every month. So be sure and come back to see the next one, because we've already got the next 12 lined up of these monthly workshops, all of which will be these kind of tips and tricks for you. So why bookkeeping, right? Okay, Pam, January 1st, you got me opening this stupid bookkeeping account. Why on earth am I going to do it? First of all, taxes become a one-click wonder. You do this, you get it connected, you get those transactions in. All you have to do is call your tax accountant and say, hey, here's your user ID, go get what you need. Or if you're doing your own taxes, you can actually create in one page your Schedule C. You push a button and you have your Schedule C, which you file with your personal income tax return or your business tax return if you happen to file, be a partnership or an LLC. It spits it out for you, okay? That easy, one-click wonder. At the end of the year, I will push one button and everything my tax accountant needs is going to come out. Okay, number one. Number two, you can classify things there according to your story. Now, I want to go back to this for a minute. Here we have sales, travel, payroll, contractors, software. Another little diversion, but it's important. Don't let anybody ever tell you you have to use those names inside your bookkeeping system. However you think about these is how you use those categories. So for example, say that you go, we don't use software, we call it SaaS, or we call it hosted services. You use that term inside your bookkeeping system. It's your bookkeeping system, and it's supposed to tell your story. It's supposed to tell your story. So classify things the way you want them classified to make sense. And guess what? No more receipts. Because remember I told you can take pictures of your receipts? This is even better. Inside QuickBooks, inside any of these accounting systems, you can now download that thing to your app, be it iOS or be it that other thing. Forget the other one. Oof, bad Pam. But that other thing, Android. There we go. Now there's a thing. There's actually a QuickBooks Hujimawatsit here. Hujimawatit's a technical term. Hang on. Let me show you what I'm talking about here. A QuickBook Hujimawatsit that's here on my phone. And literally, I got to try my Face ID. It doesn't like my Face ID. I'm going to just show you something here because I think it's so cool, because I use this now and totally live with it. There's this little thing there. I know it's backwards, but it says Receipt Snap. I hit Receipt Snap. I hit the little camera in the bottom, just like that. And boom, well, you can see my office now, but I take a picture of my receipt. It scans, it reads it, It tries to find the matching transaction on your bank statement or your credit card statement and matches it all up for you. You throw the receipt away and you never have to worry about a box of receipts again. And it works. Oh my God, I'm so glad I did this, because now I don't have to worry about that audit either. Because every expense that I'm claiming, I know I just go right into QuickBooks, boom, the receipt's going to be attached to it. Okay, so no more receipts. Another great reason for a bookkeeping system. In the other way I showed you, you still have to keep the pictures, organize the pictures, all that. So let's start fresh in 2023. No more useless reports. You don't have to keep looking at the bank statements to try and figure anything out. No more wondering how much money you have. Because here's the truth of the matter. When you look at your bank statement, you might not be remembering you have a credit card payment coming up, or that you even have a credit card you haven't used in a long time. You'll have everything in one place, the story of your business in one place, and you won't have to wonder whether you have money, whether you're making money. Also, in a lot of our businesses, entrepreneurs, we need to borrow money sometimes. Having this stuff in a system where you can push a button and create a profit and loss statement and a balance sheet for a banker changes everything. I have gone into banks with entrepreneurs with the appropriate stuff and had bankers go, okay, I see it. Good. Let's go. How much do you need? Not quite that easy, but almost. Versus when they went in before that by themselves and the bankers asked them this litany of questions they just couldn't answer. If you read my book, The First CFO, you'll see an example. It's one of my clients. I changed their name to protect the innocent, but that's exactly what happened. That's exactly what finally triggered them to get a CFO or to read the book or to read another book, the thing that I'd written for them, because it was time to deal with a bank. And the banks need to know that you know what your numbers are, right? You're a CEO here. You're not a hobbyist. Okay, so that's a big one. And finally, you can get real-time answers to really key business owner questions. How much money am I making? We're in business to make money. Even if you're a not-for-profit, you're in business to make money. It's what we do. So what are your options? I'm going to give you 3 here, and I got some QR codes that are going to pop up on the screen. These are not affiliate links. I'm not getting anything from sharing these for you. I want you to know that. I have a preference. My preference is QuickBooks because I've been using it the most. I've also extensively. I don't find it as flexible, but I will tell you that if you're going to be doing your books yourself, 6 of one, half a dozen of the other. And also the third one I'm going to show you. So here we go. What are your options?
Can I interrupt you for just 1 second? I'm so sorry. I heard you say QuickBooks was your favorite, and then I did not hear the name of the second thing you were talking about.
Oh, cool. Thank you. It's Xero with an X, and I'm going to go through it now. So you'll get to see, I'll spend a minute on each one.
Thank you.
Thank you. All right. So first one, QuickBooks. If you get QuickBooks, first thing, do not get the desktop version. Couple of reasons. If you're on the desktop version, migrate off of it. 2 reasons. 1, at some point Intuit is going to stop supporting it and you're going to be left high and dry with no time to make the change. 2, if you're working with a bookkeeper that insists you use QuickBooks Desktop, I would suggest that your bookkeeper may be out of a different century at this point. In fact, I don't suggest it. I know it. You do not need to be using QuickBooks Desktop. Every piece of functionality that's in QuickBooks Desktop can be recreated in QuickBooks Online, although your accountants that want to hang on to you because they've been with you or your family for 100 years will not tell you that because it's awkward change for them. QuickBooks Online frees up everything. Anybody you need can get your information, including your tax accountant, your bookkeeper, anybody else, all in one fell swoop, and it's a very robust system. You can get into QuickBooks for as little as $9 a month. If I put Essentials to start, now it's actually called Simple Start. $9 a month, especially if you're a solopreneur, will do the trick for you. It'll actually do the trick for you even if you're an LLC or a partnership up to a certain point. It's when you get into wanting really more robust bookkeeping and accounting, which we certainly teach you to want to do, that you'd need to move up to Plus. And really when you add payroll or really complex stuff like wanting to see things by department, that kind of thing, that you would move to Advanced. But you can get in the door for $9 a month. Now, be aware of that. $9 a month is for 12 months. And then at the end of 12 months, I think it doubles to $18 a month. So just be aware of that. And truly the QuickBooks is the most popular. But if you are in business, you can pay $9 a month for a bookkeeping system that will give you all of the advantages that I just talked about. So when people say, oh, it'll cost me money, Yes, it will. $9 a month, maybe 25. That QR code, again, it is not an affiliate fee QR code. If you grab a snap of that QR code, it will take you directly to the QuickBooks online page. I told you we'd have tools for you here today. All right, second thing, Xero. Also a very good system. I don't find it as fluid for accountant types. And since I'm an accountant type, I'm not as in love with it. However, it does the job. It's good to buy their early start program to start. It's $13 a month, moves to 37. Remember, although it looks like it's more expensive than these QuickBook ones, these QuickBook prices only hold for a 12 months. Then they go to their normal pricing. So you may end up ahead for a year by $4 a month if you get QuickBooks, but it's short-lived. So I'll leave that QR code there for a minute. Again, the same thing. They have 3 versions. Early is great for anybody who's just starting out, or even 5-6 years in business. Early start will pretty much get you home for getting what you need to do taxes and just really kind of understand your business initially. Okay. Next is something called FreshBooks. This is my least favorite. However, it is probably the most user-friendly. The reason I say it's my least favorite is when you do migrate to needing really serious bookkeeping because your business has succeeded wildly beyond your dreams, it's not going to hold up. It's kind of like I'm trying to think about a good analogy here, but it's not really robust enough for you as a business owner to understand the details of what's happening in your business. However, if you are a solopreneur and a consultant and you intend to stay that way, and you need to invoice people and you need to know how much you've spent, it's a perfectly fine solution. But if you're going to add employees and you're going to have contractors and you're going to have a lot of bills and you're going to be attaching a lot of credit cards, it gets a lot harder to play with. All right, so I'm going to give you those QR codes one more time and pause for a minute to take a drink and ask Jennifer if we have any questions.
We do have some questions. I
All
will
righty.
start at the top. What version of QuickBooks allows you to take pictures of receipts? Most of this person's clients are on Simple Start, and she knows that one doesn't.
Plus, it's the second level up.
Plus, okay. Thank you very much.
Yes.
All right, then we have another question. Should you do the bookkeeping or organizing the business information, even if you do not have an LLC yet and are not making money yet?
So I will say it depends. Well, I'm going to say it depends, but I'm going to tell you what the yes and the no are. Yes, if you think you are going to be making money in the year, okay, I would definitely do it. Yes, if you're going to have any volume of expenses, like more than 1 or 2 expenses a month. I'll even say 10. More than 10 different expenses a month, go ahead and get the bookkeeping system set up now. Why wait? $9 a month. Why wait? Number 2, the no side is I wouldn't do it if you're literally really don't know how or when you're going to make any money. Technically, if there's a plan that has you making money in 12 months, then to me, you're set up as a business. Or you're intending on having a business that's going to make money and spend money. But if you're not planning on having a business that's going to make money and spend money, and grow over time, then I would think, no, there wouldn't be any need to, because you can always just do the first thing I taught you. Just download the bank statement, download the credit card. However, one thing I will suggest is no matter what, get a separate bank account and credit card statement and keep your business expenses and checking there, because that makes it so much easier to do the first step that I showed you. Because if you've got it all mingled up, when you download that data, you're still going to have to sort through and get all the personal junk out of there. And if you have it separate, you won't, because you'll just look at the business credit card statement and bank statement. And you do not have to have an official business like company set up inside a state somewhere to do this. You can have 2 personal business accounts or 2 personal checking accounts. Just use one of them for business and one of them for personal. Thanks. Great question.
Okay, and then I'm going to combine about 3 questions here. People were wondering about your opinion on 2 other things, 2 other softwares, Wave, W-A-V-E, and Quicken.
Okay, so 2 different answers. Wave. I have had a client on Wave, and it is very hard to get useful business information out of Wave. So I would put Wave in the same category as FreshBooks. Nice and user-friendly for starting out entrepreneurs, but a little deceptive because it's not setting you up for what you're going to need when you have a successful business. So that's Wave. The second one was Quicken. Quicken is very much a personal expense tracker. So if you truly are really and only just a solopreneur and you're doing some consulting, or you're making stuff for Etsy, or you're selling stuff on eBay, if you're truly just doing one thing and it's just you, you can definitely use Quicken and just tag your expenses inside Quicken as business expenses, run a report at the end of the year that says, hey, I'm Quicken. Or I'm sorry, I'm Quicken. Duh, I'm deductible. So that's my answer on those two.
Okay, then one last question. Do you want to track your losses for tax purposes too?
Yes, 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 and yes again. I think I said yes. Here's the reason. If you are in business, and I'm not, again, I'm not a tax expert, but I believe this also applies to Schedule C, but I'm not a tax expert. Every year you have a loss in your business, it can roll forward and help reduce the income in the next year. So if you have a business, in fact, this happened in my own business. First 2 years were loss years. I intended for them to be because I was investing more than I was taking in to grow. So I had loss, then a loss. Those two losses added together got offset against my third year's income. Okay, so yes, 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 yes. Great question. Are we good, Jennifer?
We are good.
Awesome. All right, here we go. What are some best practices around bookkeeping? All right, let's just talk about this real quick. Get a bookkeeper if you are in business and you are making money of any magnitude. If bookkeeping is not your special sauce, if you one of those people that says, I hate math, I can't do zeros, numbers make me crazy. If you're one of those people, if you're one of those people who kind of knows you're going to procrastinate and not get it updated at least monthly, if you hate detail work, because it does take a little bit of time to classify the transactions the first time. I will tell you, if you get yourself through it once or twice, it's a lot better in the long run, a lot less work to do, because the system will actually remember how you classified each type of transaction. And get a bookkeeper if this is a business for you and not a hobby. So if this is not your special sauce, you know you're going to procrastinate, you hate detail work, and it's not just a hobby, get a bookkeeper. Turn on the receipt scan and here's your other secret tip for the day, flying out of nowhere, something called Mile IQ. Again, an app on your phone. Now, I will tell you, QuickBooks will keep track of your mileage. However, this Mile IQ, just as it's written, sorry, I don't have a QR code for it, but it's a downloadable app on your phone, is amazing. First of all, anytime you get in a car and start moving at that speed, it knows you're moving. At the end of the day, it pulls up every time you did that, and you swipe left if it's personal or right if it's business. Might be the other way around, but you get the point. So I literally do it once a week. I keep it on the whole time. And once a week, I swipe away all my personal trips. I swipe to the right on my business trips. Boom. At the end of the year, I have a mileage log for my tax accountant, just like that. Okay. Best app ever. And there are probably better ones out there, but this one works for me so wonderfully consistently that I have never switched to anything else. And then last but not least, here's your pitch. Join the Profit Map Academy and Mastermind to learn who's the right bookkeeper for you. We're really good. We do bookkeeping, number one, but we also refer people to the right kind of bookkeepers. We have a lot of them in our network. So there's a little tip. Okay, sales pitch done. Now, know what you owe. But guess what? It's November. For tax purposes, that's mid-year. I don't know if you can hear the howling in the background, but that is my cat. He sounds like a human being murdered, but that's my cat. So here's the thing, for tax purposes, it's really only mid-year. You don't have to do your taxes and pay it technically. Now, this is not looking into prepayments and all of that. This is just on the whole, if you haven't done this before ever, you've really got until April. It's November, right? You got November, you got December, January, February, March, and half of April. You got 4.5 months out of the year to deal with this, to do all of the steps that I've just gone through that I won't rehash now. So the early business way to do this, how you can figure out what you need, what you might owe. Get your bank statement or look at it online. And by this, I mean your bank statement, not your credit cards, but your bank statement for your business. Now, if you've got your stuff commingled, you can't take this shortcut. So here's another really good reason to uncommingle your personal and bank accounts. Get your bank statement, find your beginning balance as of January 1. And don't worry, I'm going to have an example of this you can take a snapshot of after I walk through the steps. Find your ending balance as of today, right? So 11/29 or 11/30. Subtract number 2 from number 1, or number 2 from number 3, rather. And the positive result is going to be your net income for taxes as of today, or a really good proxy of it as of today. Okay, hold that thought, because now I want you to say, oh, I'm sorry, if it's a negative number, then that's going to be your net loss as of today, as of November 30th. Now, then take a guess at what's going to happen between now and year end. Between now and year end, I know I've got this client paying me, 2 clients paying me $2,500 each, and I know I have $3,000 worth of bills to pay, so there'll probably be another $2,000 of income. Add that to what you got in number 7, get your estimated income or loss. Okay, if it's positive, multiply it by at least 30% to get the tax amount you might owe. All right, let's take a picture of this screen, which is sort of the instructions one at a time, and then we're going to do the math together, because I know this gets a little yucky. All right, here's the math. Let's say this is your bank statement. You had a beginning balance on your bank statement of $1,000, and you have an ending balance on your bank statement as of today of $4,200. I have a wayward arrow here, so ignore that for a minute. But if you take that $1,000, I should have sent those to the back. Just go back and forth here. Your $1,000 goes right there at the bottom, but your ending balance is the first thing in the column, $4,200. That's our ending cash balance. That's how much money we have left at the end of the year. We started the year with $1,000. We ended the year with $4,200. So the next thing that pops up is how much money we've made in the year, or lost. In this case, we've made it. So if we're ending the year with $3,200 more than we started the year, that's the number the IRS is going to be interested in. That's simple. We do cash basis accounting for the most part when we are early in business. Then I'm going to say, okay, that's through November 30th. Now I think I'm going to probably, and I'll use a different example, make $2,500 and spend $2,000 in December. So I'll probably net out adding another $500 of income before the year's over. So by the end of the year, I think my 2022 net income from the business is going to be $3,700. Now, I'm taking a very conservative 30% of that and saying, I want to put aside $1,110 before April 15th, strictly for my business taxes, because I know that that income, for the most part, if I'm a solopreneur and if I'm getting a 1099, nobody's taking net income tax out of it. Nobody's taking self-employment tax out of it. Nobody's taking state tax out of it. And I'm going to have some stuff to pay. So that's not your federal tax rate that I'm talking about there. That is a combination of all the things that could grow up and bite you as tax expense if you don't have like massive deductions in your tax return. All right, so let's go one more note here just to walk through this again. Start with your ending balance minus your beginning balance. You're going to get an estimate for the end of the year, how much more you think you're going to make. Multiply it by 30% and get your tax due. Okay, I'm going to leave that there for a second before you get a picture. Sorry, those yellow boxes are unhidden. Now we're going to talk about what you need to know. Here's the thing, and here's why you want to know about this. If you are profitable, taxes are very likely the biggest expense that you never track. We all look at our travel, we look at our software, we look at our employees, we look at our contractors, and then tax jumps up and becomes a surprise. And I will tell you, this has been the case for 6, 7, 8, and 9-figure clients that I've worked with. Okay, this is an issue. There go my puppies. They're jumping in. They feel so passionate about it. Now, if you're in a higher income bracket, put aside a little more than 30% until you know for sure what your deductions are going to be. And here's why I say this. Here's why I come up with these astronomical numbers to put aside. Federal tax rate, if you're in one of the higher tax rates, could be as high as 30%. Your state tax rate, I'm pulling an average. Maybe you're in a 0 state, which is great, but in mine, I'm at 6%. Self-employment taxes for everybody across the country, if you're not an employee, but you're a business owner, is 15% to 1%. So if you add all those up, what do you got? 36, we're at 51, 52%. Now, you're not going to have to pay 52%. These are going to be offset somewhat. And the reason I say that is you have a standard deduction, and then you may have specific deductions you take on your tax return as well. So I wouldn't be putting aside 50%, and 30% may be high for you, but until you know what you're going to need the first year, put aside 30%, and then there's no surprise. And you've got 5 months to save that up right now. Now, once you do your taxes for the first year with your business, or next time you do your taxes for your business, ask your tax accountant, what is my effective tax rate? That's a particular percentage they're going to know. What's my effective tax rate? And what's the effective tax rate for my business? Once you know that number from your tax provider, replace the 30%. It'll probably be somewhat lower. They range from 20 to 25% usually. But if you haven't done it before, I suggest the 30%. Okay. And the last thing I suggest, hey, join Profit Map Academy and Mastermind to get even more accuracy and tips on when and how to put aside money for taxes so that it's never a surprise for you again. So I want to talk to you as a wrap up after I give an opportunity. It doesn't look like there are any more questions, Jennifer. Is that correct?
That is correct. No questions so far.
All right. Just want to tell you a little bit more about the Academy and Mastermind. I talked about this a little bit, but here is what you're going to get for $350. And here is the QR code, which I'm going to leave up on the screen that'll take you to the application. We are screening very carefully. You'll see there are no questions in the application about your income level or anything like that. It's a really cool set of questions that most people have never been asked before about their business. And it really helps them to think about where they are in their mind around the finances in their business. So it's a cool quiz to take either way. Is it paid? Because it leads you to a call. Well, the quiz itself isn't paid, but if you click the button at the end, it puts you into a call to me to apply, and the $35 application fee when you join will be refundable. And in truth, if we talk and you hate me, we call it the, what do I call it? Refund and run call. If you decide you can't stand it, can't stand me, we'll give you a refund. You can get out of there. It's your last chance to get out the door before we have you trapped forever in a group that will change the way you think about the finances in your business. And the whole objective here, remember, is to make sure that your business finances are feeding your personal goals. Okay. That's it for the formal presentation. I'm not sure how far we went, but a little over an hour. So thanks for hanging in there. I'm going to hit escape from the share and ask Jennifer if there's any Q&A. And I'll hang around for a little bit to see if anybody has any they want to ask after the fact about what we've covered today, about the Academy and Mastermind, about anything else that's on your mind. So I'm hanging. If you've got them, post them. If you don't, thanks for coming. Have an easy and smooth tax year, and go ahead and get that bookkeeping started for next year, even if you're just starting up. It's going to make a huge pending to be a business owner in the long term. And now
So far, we have a thank you rolling in. I don't have any new questions for you at the moment.
All righty then. I'll still hang for a couple minutes just in case. Here's your chance, guys. You got them, we'll answer them. Hey, Lisa and Sarah, thanks. All right, I don't see any more questions. We are gonna, what? All highs and thank yous. Hey, Carrie. Hey, Trinity. Sarah. Glad you guys popped in. Anybody else? All right, I'm going to give it the old countdown. We'll go from 10.
Hey, Pam, I do have a question.
Ah.
Question is, so if I'm paying and not getting money, keep those as losses. Those are losses. I guess if you're paying out more and you're not getting money in,
Yes.
that's what you call a loss.
Yeah, if you have a business that you're trying to make money in, yes. Hey, Willow, thanks so much. Oh, I'm glad you're expanding into prints. That's so much fun. Then we'll have to talk about NFTs together.
I
Been doing
have
a
another
lot
question
of
for you.
research on that.
Is the LLC cost part of a business expense? The cost to set up
Absolutely.
an LLC?
Yeah, both the setup fee with whatever state you're with is deductible expense, the licensing fee. And if you use one of those companies that does the work for you, it costs, I don't know, a couple $100, then that's also a deductible business expense, Jackie. Cool. All right. I'm starting the countdown again then. 10, 9, 8, 7, 6, 5, 4, 3.
Wait.
Oh, somebody made it in under the
Two
wire.
questions. One very important question. Somebody wants to know if that was a Scotty that they saw.
It was a Westie, which is the white cousin of what is usually a black Scotty.
That's right. And the other question is having trouble with the calculation for taxes using the beginning balance and ending balance. Do you mind going over that, Pam? And actually, I was going to ask you if you can get back to that slide
Yep.
to keep those two slides up a little bit longer.
All right, let's go back there and I shall share again. Share desktop too. Can you see it? Yes, you can. Let me go back. Oh. Okay. I actually wish that those things were there, but let's talk about it. So really what we're saying here is this is your bank statement for the year. And at the beginning of the year, you had $1,000. At the end of the year, you had $4,200. Okay. Very simply, what that's saying is that you created $3,200 of cash. So you got some money in. That's what these positive numbers are here. And you spent some money out. Those are your negative numbers. So another way to look at that is call it, positive numbers here without brackets. Oh, I left one other than X's. And negatives are your expenses. So if you were in a bookkeeping system, all those positives would show as income and the negatives would show as expenses. So if you take that ending balance and subtract the beginning balance, you're going to get how much that adds up to. It's the same thing as adding up all these individual amounts. Quite honestly, you'd still get the answer $3,200. Then you need to make a guess at what you're going to make in December, because if you go with 3,200 and it's only November 30th and I'm going to net about $500 in December and you ignore that, then you're going to underestimate your taxes. So now let's say it's $3,700. Right. So when I get to the end of the year, I know that cash movement for me, I will have brought in the door a net amount of $3,700 with my business, and the IRS is going to want their piece of that. So what do I multiply that by? I have no idea what my tax rate is going to be. None. I know it's going to include federal taxes, state taxes, self-employment tax, probably some local tax. I know all those they're going to want to hit it with, right? But I don't know how much. So for now, I'm just going to sock aside 30% until I know better. And when I do that, it means I need to come up with $1,110 before I need to file my taxes on April 15th. Okay. So that's all that's saying is how much cash did I get during the year net? If this is the very shortcut way for an early business, but in truth, I do this as a check on even my 8-figure businesses. I look at their beginning bank account balances. I look at their ending bank account balances, and I make sure that that net change in cash is exactly what the tax guy is using to generate their income tax requirements. Now, of course, we do it during the year. We estimate all year long and we're paying into it all year long. So it's never a surprise, which is something you probably want to start doing as well. How do you do?
Did you go to the previous slide? That one was sort of had the instructions that people can take a picture of what they want. Thank you.
Yep. Leave that there.
And by people, I mean me.
Perfect. All right, I'll start the countdown again,
Okay,
guys.
start your countdown.
10, 9, 8, 7, 6, 5, 4, 3, 2, One, I hope we see you at December's workshop. I forget the title right now, but you'll hear about it soon enough. You all take care. Have a fantastic rest of the week. Thanks for coming.